Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for making time on this Friday.
Good afternoon.
Well, let's start with Wall Street, where stocks overnight bounced back a little after bigger declines the day before on the Fed talking about a more aggressive policy of monetary tightening. The Nasdaq had two sessions in a row with big declines, but it was the index that rose only very little on Thursday. What's the story in the global markets?
Yes, if we look at the Dow and S&P 500, it did go up. It rose by 0.25% for Dow and 0.42% for S&P 500, and Nasdaq Composite ticked up by about 0.06%, clearly turning positive right after the continuation of selling that we saw in the past 3 days. So on the third day, it did show a recovery. This rebound came as investors took the advantage of low valuations and pricing in more hawkish view of Fed stance, where they're talking about the reduction of the Fed balance sheets, speed of almost $1 trillion per year speed. All in all, that is causing uncertainty of the overall market and liquidity conditions. But nevertheless, the healthcare and consumer defensive stocks were showing advances as investor continues to bet on companies with strong earnings and dividends. Also, the energy firms showed a gain as geopolitical uncertainties continued, and we saw oil prices going down, but nevertheless, relatively higher prices on average is indicating that the valuations are looking cheap for a lot of the energy stocks. And also, Warren Buffett's firm disclosed that they have increased their tech stake in the tech hardware company, which is HP, Hewlett Packard. Overall, that indications show that it resulted into sharp rise of share prices by almost 15%. Overall, Asian market traded a bit higher with this kind of recovery that we saw in the U.S. All in all, we need to look at more carefully how the Fed is going to do their policies. But nevertheless, it seems that the liquidity condition in the overall market seems to be becoming a bit more tighter, and therefore the volatility remains very heavy. And we need to look at the overall fundamentals of individual companies and sector in order to see our performance in the future.
And with the gain on Wall Street, Korean stocks closed higher today too, but on the KOSPI, the gain was smaller in the end than it was earlier in the session. Most of the biggest companies were flat or down today, with a few exceptions like Samsung SDI. The KOSDAQ, on the other hand, had a bigger gain. Tell us about the domestic market.
Yes, if you look at the KOSPI, it was up by 0.17%, and KOSDAQ was up by 0.73%. And clearly, KOSDAQ seems to be doing much better on a relative basis, despite the valuations are a bit more expensive. The main reason for that is because of the liquidity conditions. Foreign investors are a major seller of the Korean equity market, particularly the KOSPI. They have sold 453.8 billion won worth of Korean KOSPI-related stocks, and also they sold only slightly by 25.6 billion of KOSDAQ. If you look at the overall financial conditions or the fundamental conditions of the economy, we are seeing consumer prices rising by 4.1%. Clearly, there's uncertainty about the position of the current account surpluses as well as the trade surpluses, and also the hawkish U.S. Fed results into BOK becoming much tighter in terms of the monetary policy as well. They have raised the interest rate by 75 basis points so far since the pandemic outbreak has resulted into heavy the deregulations and additional liquidity injections. So they've been tightening much faster than the Fed. But nevertheless, if the Fed's raising interest rate is much faster pace, they have raised once, and they are indicating that they will be raising 50 basis points for the May. And if that's the case, then Korea will be in position to do further tightening. All in all, if you look at the Korean won movement, it is at about 12.25. It's not depreciating much further. given the fact that tightening is there for the monetary policies. But nevertheless, we don't think that the won appreciation can be happening that aggressively for the time being as foreigners continue to be net sellers. We need to look at relatively longer-term basis.
Right, and now if we could talk about oil prices, they've come down a lot from the recent peak, partly because the member countries of the International Energy Agency, including Korea, are releasing their strategic oil reserves. West Texas Intermediate's down to about $96 a barrel from its peak a month ago at more than $120. With so many factors at play, what do you see happening with oil?
Yes, if you look at the WTI crude futures, it is trading at around $97 per barrel on Friday, and it is continuous selling from the quite a bit of a peak where we saw of almost $130 per barrel a few weeks ago because of the war between Ukraine and Russia. Of course, the supply side is the issue. However, even despite the Russian issues, we are seeing a lot of these reserves releases happening globally, and also adding additional barrels production by the OPEC Plus as well as U.S. All that resulting into much higher and aggressive injection of the supply for the oils. And if you look at the overall reserves, it has actually increased rather than declined, and that is indicating that the seasonality faces that overall oil supply will be quite abundant. All in all, we think that the price is not going to be rising much faster in the future. It might be able to stabilize where we are for the time being, given the fact that the overall supply side is quite aggressive from the oil government. All in all, a lot of the geopolitical issues affecting the oil prices, and it's difficult to indicate or gaze into what kind of trend can happen in the future. And anyway, in the short term, though, it will remain to be quite high level around where we are, which is $97 per barrel.
Well, finally, Mr. Yu, Korea has again posted a surplus in its current account, which is a broad measure of trade, of course. This is the surplus for February, and it's $6.4 billion, a little more. It was smaller than we've seen in the past. This has a lot to do, obviously, with energy prices going up so much. So tell us what you see in these numbers on trade.
Yes, you pretty much said exactly what's happening. We saw the current account surplus is posting about $6.42 billion in February, making that as 22nd straight month of surpluses. But clearly the numbers are narrowing quite a bit. The numbers, the previous month was as high as $8 billion, so it's declining. If you look at the good balance, it showed a surplus of $4.27 billion in February, smaller than $5.86 billion a year earlier. Export, which accounted for the half of the South Korean economy, grew by 19.1%. That is making it a good number. However, though, the import increase was much bigger, rising by 25.9% to $49.6 billion. Clearly, this is because of the higher oil prices that we're seeing. On the service account, which includes the outlays by the South Koreans on overseas trips, it showed a surplus of about $570 million in February compared to the surplus of $180 million a year earlier. All in all, we think that the surplus is going to gradually decline because of the higher oil prices, and we import quite a bit of oil. But nevertheless, because of the global economy seems to be very strong, particularly the U.S. side, where the consumption seems to be very strong, we think that the surplus will continue to remain so. So therefore, we don't see why the Korean won should depreciate further, but rather it should be able to show some kind of appreciation, but much slower pace.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you for your insights, as always, and have a great weekend.
Thank you very much. You too.